So good morning, everyone. It is a pleasure to open this year's Blockchain for Europe Summit. I was also glad to see that your focus is on blockchain for Europe rather than crypto assets, Bitcoin, or stable coins. Because while these topics are often discussed in the same breath, blockchain holds promise far beyond the world of finance or digital assets. Every year, this summit grows, as Robert just said, in size, in influence, and in confidence. To me, that is proof of the accelerating pace of the digital revolution in Europe, and it is an encouraging sign of the maturity and ambition of this community. My main task as Commissioner for the financial sector is to steer Europe's fragmented financial markets into a genuine savings and investments union, one that can meet the opportunities and challenges of the 21st century. And that union must be digital by design, ready to embrace innovation, to support tokenization, and to enable new technologies to scale across the single market. Digitalization makes finance a 24/7, borderless, device-neutral service. The location of the provider, of the customer, or of the assets is becoming irrelevant. Yet borders and barriers continue to hold our savings and investments union back. Digitalization can help us overcome many of these obstacles by enabling scale, efficiency, and new forms of interconnection across the single market. And for that to happen, we need to build trust in a decentralized world. Decentralization and decentralized finance do not wait for policymakers. They move fast, break boundaries, and challenge the assumptions of last century's financial systems. In Europe, while this might feel uncomfortable for some, we have to be open to shaping change rather than fearing it. This means keeping an open mind and accepting some risk. We acted early with MiCA and the DLT pilot regime. The EU proved itself a policy and regulatory pioneer, setting what many now consider the global gold standard for digital assets regulation. But the technology's potential extends far beyond what we can foresee today, so our work has to be continuous. And we don't only need good regulation. More importantly, we need a thriving, deep, and liquid market. Ladies and gentlemen, let me be clear. Europe does not fear decentralization. After all, it can drive innovation. But innovation without rules invites abuse, and the system without accountability becomes a playground for the irresponsible. Our vision is simple: a decentralized financial ecosystem that empowers citizens, rewards innovation, and protects society. Not the Wild West, but a digital economy built on fairness, transparency, and competition. Decentralized finance, pure or intermediated, has immense promise. It can lower barriers, broaden access to finance, and enable Europeans to access a truly frictionless European and global capital market. Promise alone is not enough. People must have confidence in the system, confidence that it is reliable, and confidence that they have the digital and financial skills to engage with it. That is why I place such importance on strengthening financial literacy and digital finance skills. Europe is uniquely positioned to lead in this space of decentralized finance. We have the world's most comprehensive digital finance rulebook that enables and empowers innovation. We generate fundamental research that shapes tomorrow's products. And we have the political will to adapt our frameworks where needed. We are well positioned, but without a dedicated effort to facilitate innovation, we risk missing this train. The Savings and Investments Union will ensure that those willing to drive progress in Europe have access to a vast financing ecosystem, and that our regulatory framework is an enabler rather than a barrier. I would like now to turn to tokenization, perhaps the most important transformation, which I believe deserves more attention. For me, tokenization is about rebuilding the machinery of finance. DLT and tokenization may well become the new operating system of financial markets. Just imagine A Bulgarian small business raising funds from thousands of micro-investors as easily as large firms issue bonds. Settlement taking seconds, not days, and capital markets traditionally reserved for the few, open to all Europeans. This is about the democratization of finance, meaning that participation as investors is not limited to the affluent few, but available to all with little or no entry costs. But it can also make markets deeper, more liquid, more accessible, and more globally competitive. It also gives Europe the chance to build an integrated modern capital market, powered by our diversity. Regulation must enable this shift. That is why we are working with stakeholders to identify frictions and to remove them. Europe cannot afford to watch others race ahead. We have the opportunity to lead in developing global standards for digital assets and tokenized markets, and we will, starting tomorrow, with our upgraded market integration and supervision package and improvements to the DLT pilot regime. Even at their recent peak of around 4 trillion euro, now closer to 3 trillion euro, crypto markets are dominated by traditional financial markets in equities, debt, funds, collateral, and derivatives. That is where tokenization and DLT hold their greatest potential. This is where we need to build our digital savings and investments union. Ladies and gentlemen, while focusing on the future, we cannot ignore today's debate about global stablecoins and the geopolitics of money. Stablecoins, often criticized since inception, have legitimate uses. They can make payments faster and cheaper across borders. They bridge traditional and crypto finance. Above all, they support tokenized markets when central bank digital money is not yet available. But there are also risks, especially in emerging markets. Stable coins can also become de facto monetary systems controlled by actors with no democratic mandate or oversight. Europe cannot outsource financial stability to private balance sheets or allow stablecoins to undermine monetary sovereignty. If stablecoins circulate in the EU, they must do so on European terms. They must be transparent, well-regulated, and accountable. This is not hostility to innovation. This is how we protect the foundation that innovation needs. Together with the G20, we agreed that no global stablecoin arrangement should operate without regulation. MiCA delivers this. It provides a sound stability, prudential, and consumer protection framework to promote innovation. In practice, stablecoins are most active outside the EU, especially in emerging markets. This also reflects the strength of Europe's banking system and payment rails and trust in the euro. Who knows, Europeans may one day pay for their coffee in euro stablecoins. But for now, stablecoins in the EU mostly serve crypto trading, where dollar-denominated pairs lead the market. MiCA is the global gold standard for crypto and stablecoin regulation. We should be proud of it, we should promote it, and we should trust it. Finally, I would like to speak about supervision and how I see the future of crypto asset supervision in Europe. Crypto is cross-border by nature, and its risks move at the speed of the blockchain, fast. This is faster than any fragmented system could keep up with. This is not a risk I believe we should be taking. So I am suggesting that we consider another way to do it. If a platform serves millions of Europeans, European supervision must match that scale. European-level supervision means one high standard rather than 27 interpretations, a level playing field for innovators, stronger protections against market abuse and financial crime, and a single market that truly functions as one. This is not centralization for its own sake. It is Europe creating unity where fragmentation will only serve to hold us back. And I think that we have had enough of that. If we want the EU to be a global hub for trusted digital finance, our supervision must be integrated as the technology itself. To the innovators here, Europe needs you. Yes, it needs you to build the products and services, but it also needs you to build trust. Don't just strive to challenge the old system, help to design a better one. In Europe, we need partners who tell us what needs to be fixed and are ready to help us fix it. I have an open door policy, and I want to hear from you. The next decade of finance in Europe will be written in code, shaped by networks, powered by tokenized assets, and influenced by decentralized systems. But it will be anchored in European values of openness, fairness, stability, democracy, and yes, autonomy. If we get this right, Europe will not be catching up. We will be setting the pace. Let's make Europe the world's most trusted, dynamic, and innovative home for decentralized finance and tokenized markets. I wish you an excellent conference, 2 very productive days, and also a lot of fun in the parallel events. Thank you very much.
Thanks for this great opening speech. We now will start with our first panel. Actually, I think I will hand over just for you to warn, and thank you for coming. I will hand over to our MC, Tommaso, which most of you know already. He's the most energetic guy probably around. So if you want to party afterwards, just ask him. He knows where to go. And yeah, over to you.
Yeah, well, I mean, hi again, welcome. And we had a great start, and we are going to get right into our panel debates. Again, just a few reminders throughout the day. Today there is, as I mentioned, one parallel session, so if you haven't signed up, you can, I think, still try and sign up, although there was a lot of interest for that. Then again, indeed, at the end of the day, we have our networking drinks, and then this evening, don't forget, we all meet up at the Delirium Bar for a few nice Belgian beers. But without further ado, I think we're going to get started with the first panel of our 2 days of policy debates. This time, just on the back of what the Commissioner just told us, talked about what is going to be published tomorrow, right? So also the great timing of our conference this year, exactly at the same time of the publication of the Savings and Investment Union package by the European Commission. And so what better way to discuss that all with our first panel of the day? I think, Robert, if you just want to come back on stage as you are moderating this first conversation, and then we call on stage all of our speakers: Peter Kerstens from the European Commission DG FISMA, Stefan Mogelin from BaFin, Roland van der Stappen from Coinbase, and last but not least, Isadora Arredondo from Hedera. Welcome, welcome. A big round of applause for our first panel. Thank you. Welcome.
Great. So I'm very happy that we can start actually this day after such an inspiring speech with basically this very distinguished panel. I mean, we have some of the top experts in the economy or business side and on the policy side on the panel today. So just welcome very quickly, I mean, just without further ado, Peter Kerstens from DG FISMA. He's also one of the responsible guys for MiCA, if you haven't known. So please bother him as much as you can. Then Stefan Mogelin from BaFin. He's also the head of the DLT working group at ESMA. Then Roland van der Stappen, who's the head of policy for Europe from Coinbase. And last but not least, our very own Isadora from Hedera. She's the global head of policy. And I wanted to kickstart the conversation with you, Peter. I mean, we heard the very high-level ambitions of the Commissioner about the Savings Investments Union and tokenization. So we have very high hopes. Can you give us maybe some more details on what you just said and what we can expect from the upcoming policy publication tomorrow, actually, or maybe the day after? I think you can enlighten us a bit about that.
It's a very big package. In these days of simplification, we try to simplify everything, but I was told by my colleagues that the entire SIU package is 600 pages, so you'll have time to read and to digest it. Luckily, most of it does not deal with digital part, although, as the Commissioner said, the Savings and Investment Union must be digital by design. If it's not digital, it won't be, because digitalization is the only way we have to overcome the barriers of distance, of jurisdiction, and of differences of law often. Specifically, in the package for this audience will be an upgraded DLT pilot regime. So the DLT pilot regime was a specific regime to experiment with distributed ledger technology in the traditional financial space, so in the area of securities and bonds and so on. And when we first presented that together with MiCA 1, 5-6 years ago, there was ambition on the side of the Commission, or some people in the Commission for this, but that's where it stopped, the ambition. Most people in the industry, and I'm talking about the traditional financial industry, were rather opposed to this DLT pilot regime. Most member states were not very keen on it, and that's why the DLT pilot regime is very limited. It allows for some experimentation, but because of its scope and limited asset classes that are permitted in it and low value thresholds, it really wasn't worth the investment for many firms. Things have changed, especially in the traditional industry. They are now all moving towards tokenized assets, building systems on distributed ledger technology, and they really want to power financial markets, traditional financial markets, with distributed ledger technology. And we are therefore upgrading the DLT pilot regime, both in terms of its scope of asset classes that are going to be permitted, but also in terms of values that can come under the scheme, sort of how far the scheme will go. It'll be very, very significantly increased. There's still a debate, and that debate will continue in Council and Parliament as to whether there should be a top limit at all, whether there should be a ceiling at all. Some people think there should be a ceiling because it's still experimental. Some people say, well, this technology hasn't yet proven itself, so we need to have limits on it. On the other hand, I read the other day, someone sent it to me, that stablecoins now have a higher transaction volume than Visa and MasterCard. I don't know whether that's true, but sounds very impressive. If that's true, that means that the technology is proving itself and that we are moving beyond the stage of experimentation. So that's the DLT pilot regime. It's very technical because our financial market infrastructure regulation is extremely technical. And I've told my colleagues who drafted it that I think I understand about 30% of what they've written, and the rest I trust that that's what it's supposed to be. But don't ask me to explain all of it because I don't understand it myself. The second part is the supervision part, and the Commissioner spoke about that, is that the Commission will be proposing more centralized supervision of financial market infrastructures, but also of crypto asset service providers. And that is going to be a very interesting debate because there are, in the EU and among member states, some member states who are extremely in favor of this, and they will also be speaking at this summit. And there are some member states who are extremely opposed to this idea. And we'll have to see where the discussions take us. But the Commission, being the European institution it is of course proposing a European solution, and we hope that we will get the necessary support for this ambition, but we'll have to see.
Thanks, Peter, for this outline. Stefan, you're sitting here with a double head as a representative both of BaFin, but also the head of, or the chair of the DLT working group of ESMA. Can you maybe elaborate a bit the work that, in particular, ESMA is doing, that you're leading on this issue, on tokenization, and how do you look at the to be expected SIU package? And then maybe give us a bit also about how do you look at it from a German perspective, particularly on central supervision, maybe?
Yeah, I can do so. And maybe first of all, it's important to highlight really that the DLT pilot regime as an European regulation is one of its first kind, which really allow innovation by providing exemptions from existing regulatory frameworks. and to support the uptake of new technologies. And in that context, also taking not only from the ESMA perspective, but from the German supervisory perspective, it's really good to see, as Peter said, that we also, while the DLT pilot regime is actually limited to specific services and products, we have already 6 firms authorized under the DLT pilot regime, which actually provides DLT market infrastructures, and that is really increasing competition and also innovation on the level of financial market infrastructure in Europe. And what we do in terms of tokenization, so under the application of the pilot regime, but also under national laws, is that, first of all, we also provided as a Q&A that tokenization does not only refers to the directly issued instrument on a blockchain or on a DLT network, but also include digital representation of already existing financial instruments. So that is also broadening the scope in the potential application of this new technology to financial market infrastructure services, in particular on trading and settlement services. And further, with regard to the authorization procedures, which is a close cooperation between national competent authorities, the ESMA, and also the Euro system, where service providers aims to also facilitate security settlement activities. So there's a close cooperation, which actually also, in light of these 6 authorized firms, allow for the use of new settlement, innovative settlement mechanisms. So we really see that on an individual level, we have close discussions with the market participants on how technical setup could be implemented to further allow this innovation and tokenization of DLT financial instruments. And then maybe also providing some insights from a German perspective. So at the same time, at the DLT pilot regime was introduced, the German legislator also introduced the German Electronic Securities Act, which allowed in Germany the issuance of dematerialized securities. And that is really important because the pilot regime is a supervisory framework, and what is still required is that for the issuance of equity or debt instruments, there are also national provisions applicable. And here, the German legislator really in a forward-looking manner introduced this specific national law, which also allow issuance of dematerialized securities using blockchain or DLT. And in that context, we can observe that over the years, the combination of the pilot regime and this national framework allows services around the full life cycle of dematerialized or DLT-based instruments. And what we actually also see in light of the discussions with traditional market participants at Peter Ausland, there's more interest actually on using DLT for specific services. So we can also see that in that context of DLT-based instrument, but also on DLT networks, there's discussions and innovation around further services which might be used or supported by DLT, but also on smart contract-based instruments using specific data fields or other automation mechanisms. And that is really interesting because that is not only limited to capital markets, but to a more broader decentralized ecosystem.
Thanks for that quick deep dive. Roland, Coinbase is a CASP licensed under MiCA. What's your perspective as Coinbase or as a CASP on the to-be-expected regime? And what are the potential new roles for CASPs in it?
First of all, I have to say I really enjoyed the Commissioner's speech, and for all of Thomas's intros, I felt for a second I was already in the delirium bar. What really struck me is that, it's clear for the Commission now also the direction of travel is, we're moving towards DLT-based capital markets, and tokenization will be kind of like the end state. So as Coinbase, I think as many of Blockchain of Europe members, we're very excited about the revised DLT pilot regime, because we also see this is the beginning of the convergence between, MiCA and like MiFID entities. Like we obviously very much supportive, of like removing the thresholds or raising them significantly, allowing all asset classes to be held in that framework. And as Coinbase, we kind of see our role as an infrastructure service provider first. So obviously keen to kind of promote permissionless blockchains as kind of a base layer financial market infrastructure, to see self-custody or our own custody solutions kind of grow there. Also keen to maybe see the emergence of opportunities for common everything exchange to hold both tokenized MiFID instruments and crypto assets on a single platform. So kind of keen to see what will be in the final package tomorrow, but kind of already see from the speech that there will be more opportunities for firms in this room today to also grow in beyond the crypto assets realm. Then the second question you had was. On the competitiveness versus other regions, I think the commissioner also said like we need to compete with other regions. Like one question I would always have is obviously the revised DLT pilot regime will be part of a broader package. I know supervisory discussions tend to be thorny and lengthy. So a question from a Coinbase perspective, I guess also for many blockchain field members is, can we in time already maybe carve out the revised DLT pilot regime from that package to kind of accelerate its implementations, because other jurisdictions are moving quite fast. And maybe last, what also struck me in the speech from the commissioner was kind of openness towards decentralization and decentralized finance, but at the same time, the DLT pilot regime is still based on like a licensed operator. You either need to be MTF, a settlement system, or a trading settlement system. Pure DeFi models where you have decentralized exchanges interacting with DeFi interfaces don't fit in this framework yet, and other jurisdictions may allow for those models to enter the markets already next year, notably the US. So then the question is, how do we as the EU also accommodate those models? Otherwise we may have to wait for the review of the review, and then we may be 8 years behind. So I think it was good to see the commissioner embracing that as a concept, but it would be good to also kind of put that into practice as well.
Thanks, Roland. Isadora, maybe now heading to you. You're an infrastructure provider, so maybe you can give us the perspective from a layer one, and then I would like to go back on something else, but I think it's important to hear that first.
I thought you were going to say last but not least again. So why does Hedera care about tokenization? Obviously, like from the outset, what we've been basing our conversations with policymakers and with regulators is kind of understanding the mosaic of different architectures that are available out there, and kind of what are some of the criteria and things that institutions look for and that the regulators ask for when it comes to settling in decentralized infrastructure. Hedera is a public permission chain, so we are different to the private permission chains like Corda or perhaps JPM's Onyx, but we're also different to the sellers of this world that have kind of like an open validation. And the reason why I'm noting these differences is because they matter in terms of how financial institutions think about how the future of tokenization evolves, in particular things about settlement finality, accountability, governance, and we very much provide this hybrid model. But because we're a public chain, we're involved in discussions about kind of like the broader themes that and concerns from regulators on permissionless chains, settlement finality being a really important piece. So we were very kind of encouraged to see some of the leaked proposals in relation to that, as well as in relation to kind of like the unbundling of CSD services. I think at the very beginning of our conversations, we were still very much focused on kind of DLT being an FMI, and we're kind of gradually evolving to actually there are different roles across the ecosystem that can play a role in the governance process. With Hedera, obviously, we are different because we are permissioned, but we see kind of like the future infrastructure as an interaction of many different types of architectures. So in relation to actually the proposals that we've seen, we actually think it's a positive thing that there wasn't necessarily too much prescription on the use of public or private or permission and permissionless. We think it risks codifying that into law. Although I do think that market participants, as it take a leap forward, they're going to start asking more questions about those details. So I'll just leave it open there. But those are kind of like the things that we are looking for. But I would agree with Roland that in general terms, a lot of the a lot of the proposals in relation to the scope of assets, the participants, the unbundling of CSD, and kind of trying to really crack the nut of settlement finality will be very kind of welcome moves in the right direction.
Thanks for that, Isadora. Question to Peter and Stefan on this. When we're discussing a lot about the upsides and the innovation that comes out of that, is there anything that you see as a challenge? Might be political, might be technical, or another perspective that you think we as an industry should start thinking about to addressing it proactively rather than being surprised or just being reactive to what comes out of the regulatory supervisory landscape? Maybe Stefan, we start with you.
Yeah, so maybe pick up what Isadora already mentioned. So in terms of different types of blockchain protocols or DLT networks, so it is first of all important in terms of settlement finalities that does not only or does not apply to any type of services provided. So that is really a specific requirement for settling securities transactions, in particular between financial institutions. So the pilot regime already allows an exemptions in terms of notification of a system. So that is somehow addressed. And what we really see as a supervisor is that these discussions on the use of underlying infrastructure really requires us to amend our views. So in traditional financial markets, so we still apply the regime of outsourcing responsibility and having contractual arrangements on providing different services in terms of DLT-based infrastructures, in particular on the underlying level. So it is really important, and that is what we also aim to apply, is that we really try to see that the requirements are applicable on the level of the service provider. So that could be a set of smart contracts and then entity providing these services. And also on the instrument level, so where these financial instruments are deployed as a smart contract, but not actually maybe in all instances on the infrastructure level, which can be seen as an open infrastructure which provides core functionalities which are available for a large variety of service providers or persons.
Thanks, Stefan. Peter, what's your view on this?
Well, I think the main risk is that industry thinks, oh, this is it, and now we can sort of say what we don't like about the proposal and leave it at that. This is the opportunity for everyone in the industry to sort of say, well, look, this is a good start. If you don't think it's a good start, say it's not a good start, it should be much better. But be specific about what is needed to make this a reality for the future. Last year at this conference and the year before, when we started thinking about what we are going to propose tomorrow, actually formally we're proposing it the day after tomorrow, but that's a technicality. I invited everyone to sort of say, well, if you have any concrete ideas on how to improve the DLT pilot regime, do let us know. And I received only one kind of comments, is the ceilings should go up and more assets should be eligible. For the rest, I received no ideas, contributions, and my colleagues received no ideas, no contributions from anyone. So this is a call on the industry to say, look, if you want to tokenize the hell out of everything, be specific as what it is you need, or why does the existing regulatory framework, doesn't it work for you? What is it in MiFID? What is it in CSDR? What is it in the finality rules that don't work or that you can't apply in a DLT environment? Because we need that concrete information to build and come forward with solutions as to how to address that so that we can build on this. All the other changes that we're going to propose are things which we kind of invented ourselves, be it on the unbundling of services, or be it on a new system for application for exemptions. So rather than saying in advance which exemptions you can qualify for, there's going to be a much broader system where firms themselves can say we need this or that exemption and have to justify why they need the exemption. It's inspired on the US and UK model of exemptive relief. And we've been thinking, I'm at the European Commission for a long time, for the last 20 years, we've been thinking of a way of how can we emulate this idea of exemptive relief at the European level. And we think we found a solution. It's a bit complicated, but everything in Europe is complicated, but we may get away with it. So now the onus is going to be on the industry. If you say, look, we want to use DLT here or there or wherever, and you can't do it, you have to make your case as to why you can't implement X activity or Y activity on a DLT and what changes are necessary or what exemptions are necessary, and make your case. And the idea is that you would go to your national regulator, BaFin, AFM, whoever, and make your case as to why you need an exemption from this, that, or the other provision of our legislation. Because I think that will teach us much more as to what the regulatory system in future should look like, so that it is DLT neutral, that it's sort of, or it's not DLT specific, it basically addresses all kinds of technologies. The current system discriminates against DLT, not by design, but by effect. It discriminates against DLT because DLT was not an issue, didn't exist when that regime was put in place. So no consideration was given to decentralization. Now we have decentralizing technologies, and we have to adapt these rules to this reality. But we don't know yet how to adapt them. That's why we're starting with a system of exemptions, but that's not going to be the future. So the opportunity to design the regulatory system for the future is now. It starts, we give an opening shot with our proposal, and it's up to you to sort of say, be specific, this is what we need, this is where things are going. And I do not expect that everyone in the industry will have a uniform view as to, oh, this is where we're going. That doesn't matter. If you disagree among yourselves, fine. Let us hear your disagreement, and then we can take it from there.
Thanks, Peter, for that. Question to you, Roland and Isadora. When you think about the tokenization models that are out there, do they all fit into the DLT pilot regime? Do you see any issues with some of them, or what's your take on this?
Happy to start. I think I agree with with Peter. I think like good to have those kind of move towards an exemption style regime to kind of compete with US. But a question we always still have is: do all models have to fit within the DLT pilot regime, or do you see a world where some models operate outside of it? As I mentioned earlier, like the DLT pilot regime is very much written with licensed operators in mind, and if you run things on a decentralized exchange, then obviously these kind of models do not fit in that yet, even though many of the building blocks that would be needed to allow for those like CSD unbundling kind of are only available within it. So you can almost that I think is a key challenge for the EU to kind of overcome that obstacle, so that these models can also be allowed within the EU and not only like in US or UK when they move forward. Like the commissioner said, decentralization does not wait for anyone, but at the same time I still feel decision making is deepest 27, so we need to have a view on in the EU, and I think also as part of this package, how we are going to position ourselves on allowing like more pure DeFi models to operate within the EU. And maybe beyond that, it's not only the DLT pilot regime, right? There are also other flanking measures that need to be supported. We still have discussions in Basel around how do we approach permissionless blockchains. You mentioned as well, this is like an operational risk issue. It's good to see some renewed momentum and international on that, so that needs to move forward. We also have discussions within the European Data Protection Board which were challenging for companies to use permissionless blockchain, because they kind of implied this would not be GDPR compliant. Understand the digital omnibus package would kind of maybe counter that. So from our perspective, not everything will be fixed within the DLT pilot regime. We also need to look beyond that.
Thanks, Roland. Isadora?
Yeah, so I think as a general principle, it's not uncommon that sandboxes evolve from how they were initially designed, right? Because they are trying to test out the regulatory framework as much as business models, in fact. But I think the difference in this particular case, as Peter was alluding to, is that you are talking about a completely different kind of like infrastructure that is decentralized. And so you kind of have to rework instead of kind of like trying to modify the rules to fit the structure, you need to kind of think about the structure and how the future ecosystem will look like. But obviously that's very challenging because you need to think about, questions that are also of legal matter, and you need to think about questions that are of cross-border nature, and you need to think about, it's not just simply, so the pilot should be seen as a framework rather than just a pilot, because otherwise it doesn't have kind of like the scale and ambition it needs to actually kind of like fully lead into a thriving ecosystem. I agree with Roland, the Basel standards are a very critical piece that I understand is now being revisited because of industry feedback. I think it probably represented one of the biggest obstacles to institutional participation. But equally, the pilot and in the UK, for instance, the DSS, they were very much designed with kind of like MTFs in mind and more. So I think through this testing, we've seen that actually we probably kind of like need a recalibration of how those roles are played.
Thanks, Isadora. I don't know, Stefan, can you maybe elaborate a bit how, when you discuss this among your colleagues at ESMA, how is the perception about this? Is this more in line with what our industry just basically voiced, or are there any hurdles where you say like, hey, look, we have to overcome them first, and how can we as an industry help with this? If there are any.
Yeah, maybe to pick up what we have heard and what is most pressing is indeed the increase of the thresholds or limitations. So that is what is also echoed here, and that is what we received also as a feedback from market participants of really being one of the next steps to be taken as fast as possible, because that really allows the actual authorized firms to scale their business, because actually their services or settlement and trading relies on instruments which are being issued and heavily traded based on their volatility, and therefore maybe debt instruments or small medium entities issuance are not that large or a large number available to really scale for different purposes and service provisions. And in terms of broader ecosystem and using DLT or different DLT or protocols, it's really the kind of approach of regulatory frameworks to have some kind of an entity still responsible for the service. And then what we see and also discuss on all these innovative settlement mechanisms and application of DLT-based market infrastructures is that these provisions can be applied to a specific set of services which really could rely on a large degree of automatization. So we also have seen DLT market infrastructures which operate a set of smart contracts to provide their MTF and also the simultaneous settlement of transactions. But there is still some kind of responsibility to ensure that these services are provided as required, because there is, so if it is still called the DLT pilot, so there is not a sandbox where some kind of additional safeguards are available. So they're really dealing in that transactions and that financial instruments for investors. So therefore it is really important to also allow and enable risk management. And that is what could be helpful also from the industry on the technological level, is to provide further insights or background on how these regulatory framework can be applied to these decentralized infrastructures, because what's now some kind of being discussed or difficult is to have risk management capabilities on these specific protocols and functionalities, and they actually differ between different blockchain protocols, and therefore it is important to really understand how a firm can apply and ensure governance and risk management for these specific services, taking into account the specific characteristics of a given blockchain protocol.
Can I actually maybe come in on that? And I would agree with you that one of the most difficult challenges here are about how to ensure as much openness and flexibility, whilst and ensuring that there's kind of like all these architectures that are being used by market participants, but also harmonization, right? Because institutional participants need that kind of clarity and kind of that more detailed perspective of what are the risks, how can I manage them if they're going to really kind of take a kind of start building on chain. And I think we've done actually a lot of work with other L1s across the summer, and we've had like like tons of conversations with regulators, prudential regulators in particular around the world, although this also concerns kind of like operational resilience in terms of having traditional kind of level service agreements that you'd have. How do you do that in the context of blockchain? And basically what we've been trying to raise awareness on is the fact that at an issuance level, and at an asset level and at a smart contract level, there are quite a few controls that you can already apply and kind of modulate in a way that you have sufficient asset control and sufficient whitelisting that prevents you from or that helps you kind of like be compliant. But I agree with you that there's kind of like a better and closer dialogue between regulators and kind of like the infrastructure providers about what are the specific ways in which the technology itself delivers the same outcomes as kind of like the regulatory principles that they are meant to help advance.
Thanks for that. I mean, we discussed now basically the infrastructure layer, then how we use smart contracts and so on. What do you see, or how do you see the role of stablecoins in a tokenized economy? I don't know, maybe Roland, you want to start?
I also just wanted to pick up on Isadora's point. I think from our perspective, it's not only about regulation. I think one of the key unlocks for us would be to unbundle the CSD to kind of allow for decentralized settlement, but it's also about supervisory expectations and also sharing best practices. I know in Germany you already have like the likes of 21X and other operators, and it's kind of sharing how supervisors have assessed the risk and then have proposed risk mitigation measures at EU level to deal with, you know, like smart contract risk, deal with self-custody. I think this is also important for us to make the DLT pilot regime a success. So not everyone should always come with a complaint list to Peter, but it should also be, the burden should be shared maybe with some of the supervisors. Then on stablecoins, so, you know, did also listen to the commissioner. I think there, you know, we see there's a clear opportunity to promote Euro the pilot regime and beyond. And also there, I would say this is a matter of also supervisory interpretation. I don't think we need to wait for the DLT pilot regime to kind of promote the adoption of stablecoins in capital markets. It's something that NCAs within the ESMA context can already discuss. And I think from that perspective, I would say it's important for the European Commission to send a signal tomorrow as part of the market infrastructure package, and then maybe ESMA within its committees to already discuss and promote certain interpretations that can already accommodate that, in particular when we want to be competitive versus other regions where they already allow for stablecoins as collateral or settlement assets in capital markets. I don't think the EU should wait for the package to be adopted to act on that.
No, absolutely. Now, I know there are some people probably here in the room as well who hate the idea that electronic money tokens under MiCA are electronic money covered by the Electronic Money Directive and therefore are funds. I hear a lot of complaints about this because that catches them also by payments legislation and a lot of hassle. But because they are funds, they are therefore also a valid settlement instrument for tokenized assets. And this flows directly from level 1 regulations. You can already settle a securities transaction in stablecoins. That's allowed because stablecoins, electronic money tokens that is, are funds. And the requirement is to settle in funds. Electronic money tokens are funds, so therefore you can settle in them. The question about the future really is are there enough of these things around? Euro-wise, I think we have something like 300 million euros in stablecoins currently around. 300 million sounds like a lot of money, but it really is nothing. We have 280 billion stablecoins around. Most of them are dollars. That sounds like a lot of money, but in the greater scheme of things, that's nothing. If capital markets move to tokenization, they will need vast, vast amounts of settlement money. Could be stablecoins, but I think it is unlikely that any issuer or any group of issuers has the ability to produce enough stablecoins to meet the needs of global capital markets. Only central banks have the elasticity of supply and demand of cash and liquidity for settlement purposes. And that's why, for example, the ECB's work on API and Pontes is so important, because as these big markets, and I'm not talking about crypto markets, I'm talking about equity markets, debt markets, derivatives markets, commodity markets, as they move to tokenization, and if they want to settle, they are going to be needing vast amounts of cash. And no disrespect to any stablecoin issuer or any financial institution in this space, you simply do not have the size and the capability and the elasticity to meet the needs of capital markets. Central banks will need to step up, and they will step up, because this is a fundamental principle of what's called the Committee of Payments Systems and Market Infrastructure, CPMI, is that financial markets should settle in central bank money. If we're going to see tokenization of financial instruments, that is going to be the real driver for tokenized and digital central bank money, not only in Europe, but in the rest of the world.
Talking of the rest of the world, right? I mean, we see a lot of initiatives around the globe. And I know that, Peter, you spent some time in the US, but also in the Middle East. What do you see there, what is different, maybe in mindset or in outlines politically as well, compared to Europe, or is it all the same?
Well, the US has really come on-chain when it comes to its regulation. Of course, they're very proud of their Genius Act, and they should be very proud. They found a very good source of inspiration as to work right into it, and that source of inspiration, I think, was Mika. Doesn't matter. Like, good ideas, there's no copyright on good ideas. There's no copyright on bad ideas either. If I look at the rest of the world, I see still a fairly disproportionate amount of attention to money laundering, KYC, and what have you, as if crypto assets and tokenization are one big fraud and money laundering conspiracy. They're not. There is a fair bit of illicit activity, but that's not really what crypto or tokenization are about. It's more about opportunities. And because it's strong technology and it has great opportunities, of course it also attracts grifters and criminals and hangers-on who want to exploit the system. But we should not focus too much on that. So I see regulators catching up, and they are very inspired by European developments. What I do see if I travel outside is that I see very, very dynamic markets and a lot of energy, and a lot of drive, a lot of money going into this. And if in Europe we could only have a little bit of that energy and that dynamics and that drive, I would be so happy, because as I wrote in my report in the Commission, internal report, so you won't see it published, about my trips, is that we may have the most comprehensive regulatory framework governing digital assets, but we don't really have a very deep or big digital assets market in Europe. Other parts of the world have no regulation, but very, very big and deep markets, digital asset markets. Which makes me wonder is that, do these things need regulation at all? Or is regulation the cause of the fact that the European digital asset markets are a bit sleepy, to put it mildly? I hope not. We tried our best to encourage the market, and we believe that Europeans need regulatory certainty to grow the market. But what we need from the rest of the world is that dynamics, that can-do approach, that, yes, not everything will work, but let's go for it, because the energy I see in the Middle East, the energy I see in Asia, in the APAC region, the energy I see on digital assets in the US is not at all present anywhere in the EU. And that worries me the most.
So maybe, Isadora, how can we change that from an industry perspective?
Yeah, happy to. No, I think that kind of also retail piece is crucial here, and it ties back to the Savings and Investment Union in that, in comparison to our big, beautiful neighbor, the US, we don't have that kind of capital markets culture where everybody is kind of like, investing in stocks. It's a much more kind of like conservative approach, which is also why, we have much higher savings. So I think part of actually making MiCA and making the European crypto assets industry a success is about bringing kind of like the digital consumers on board and kind of educating them, financial literacy being a key piece, but also kind of not kind of assuming that their desire to see faster, kind of more nimble products is actually a part and parcel of making a deeper capital market successful, right? Because you're broadening participation. The regulatory piece is how you build the guardrails and how you build the incentives for institutions, but it's also about kind of like how do you build a culture where the public actually participates in building a thriving capital market. And crypto, to some extent, there are pockets of the industry that are more about the volatility, etc. But to some extent, it's a reckoning in terms of that generational shift in how people want to spend their money and invest it. So I would see that's kind of like the missing piece in Europe that we do see a lot in Asia and that we do see a lot in the US. But I think in terms of like the guardrails that Europe has built, I would agree also with Peter that having kind of like that variety of instruments with regards to both stable coins, tokenized deposits in the future, and also central bank money will replicate the things that actually work really well in today's landscape and make sure that this is scalable.
Thanks, Isadora. Roland, Coinbase is a global company. How do you guys approach that when it comes to your home base, US versus Europe?
I think the way to look at it, I think we're always quite critical of the EU, but we do have the good ideas. Maybe we have them too early and then we are too conservative. And while we kind of create like a sandbox and maybe think about how to enlarge the sandbox, we should realize the US is going straight for the beach. They won't have any sandboxes over there, and they have I think what is different there is that the SEC has been very bold setting out its vision that capital markets will move on chain, including equity markets. And what is also different, people tend to focus very much on genius and clarity. The two kind of make up MiCA and are quite similar. There's maybe copyright, could be a copyright on good ideas, Peter. You will have a good royalty by now. But what people kind of miss is also what they call Project Crypto, right? So the SEC does have the no action relief powers, and this is what I think can enable the US to be behind one day and 1 year later be 3 steps ahead of us. So I think from that perspective, it's important that the EU finds a way to kind of also kind of mimic those no action release, because we can never fully prepare for the future, because we don't know yet what models will emerge tomorrow. So I think that from my perspective, that is kind of key. And then I think the second thing is to have a positive vision, right? So very much appreciated the commissioner's speech to say that tokenization, decentralization, don't wait for anyone. And this, I kind of have the most senior level of the commission kind of agree that this is almost the end state that we need to work towards, because I think has also been missing to date.
Thanks, Roland. Maybe, Stefan, do you want to give your perspective from an ESMA or maybe BaFin on this? Because I think Germany has a specific role in this, right? It's the largest country, largest economy, and have been on a number of issues in the financial service space, always part of the leadership on where we go next. So what's your take on this?
So I would assume that given all the developments, and actually what we also see, for example, in Asia and Singapore, is that there are the same topics to be discussed. So that is a good sign that we still somehow at the forefront of the deployment of DLT-based capital markets. But actually, given also the frameworks we have and also the opportunities the pilot regime, for example, already provides, and there are also proposals envisioned which really allow further innovation on DLT capital markets, we see somehow a need to really now decide and discuss the vision of tokenization and DLT-based capital markets. So the development starts now. So we really see that the ECB is working on the project Pontes and Appiah on the central bank digital currency side, and now we see various implementations using various blockchain protocols, and actually it is now really to come together to discuss how it should look like in the future, and then to also agree on issues like interoperability and standardization of financial instruments, because the ecosystem and the market participants could only adapt to this new technology if it really allows scaling in this decentralized ecosystem, and therefore it is also required on industry efforts to discuss and agree on specific standardization, and also how different technologies may interact, because otherwise we would come back to only one solution, and that would really shift the opportunity for further innovation, in particular on DLT financial instrument and capital market services.
Thanks, Stefan. We're unfortunately slowly heading towards the end of it, and I wanted to ask one question to all of you, so everybody has like 45 seconds to answer. If you look into what we're about to face as of tomorrow, right? It's a completely new regime, loads of debates, a timeline that is unforeseeable to an extent, but I think there's still a lot of optimism to be had. If you look at it from today's perspective, what would you wish to happen in the next, let's say, 18, 24 months in the context of the SIU? And what would you wish from either the industry or the regulatory political environment? Maybe we start with you, Isadora.
Sure. I think it's Seneca who said, success is when opportunity meets preparedness. The EU is really good at getting prepared for things, not so good at moving fast. And I think, we have a big opportunity now from a kind of geopolitical context. And I think if I am really optimistic that this time will kind of like catapult Europe forward, but I haven't been here long enough, so that's like my caveat. But I think that's I see this, and Commissioner Albuquerque's vision that she set out today. I think we've seen a massive shift in tone, and I see that as a positive way forward.
Thanks, Isadora. Roland?
Maybe a couple of things from my side. I think everything starts with like a positive and an ambitious vision. So it was great to hear the commissioner talking about that. I would also say maybe we should find a way to accelerate implementation of a revised DLT pilot regime. I think pretty much everyone in industry agrees with like removing the gaps, putting them higher, all asset classes, and so forth. And then for me, a key question is still like, how do we accommodate for the most innovative, more DeFi-centric models within that regime or outside of it, so that we stay competitive with other jurisdictions that may allow for it.
Thanks, Roland. Stefan?
So then, given that we already have a European regulatory framework, so I would focus on the national legislators. So as we see that there is a close interaction between national securities laws and the pilot regime as a supervisory framework. So I would really encourage that also national legislator try to align their approach for DLT-based financial instruments, because actually so that we face the risk that we still have fragmentation on these national securities law in the digital era. So if we do not align on these national provisions for the issuance and transfer of ownership, so we still face the risk that the European Union has a fragmented framework, still having the DLT pilot regime as a European regulation for the supervision of such services.
Thanks, Stefan. Last words to you, Peter, or from you?
Well, I hope to see a little bit less nostalgia among my colleagues and peers for technology and infrastructure from the past, and more an eye towards the future of where things are going. The Commissioner said that the future of finance is tokenized, is DLT-based, it's going to be the new operating system of financial markets. She shares that vision, but this is a vision which is not universally shared in the Commission, and it's not universally shared in the European Parliament, and it's not universally shared among the member states. We can only propose. Ultimately, it's the Parliament and the Council that decide. If they do not share that vision, that the future, or the realization, if they don't realize that the future is going to be on-chain and tokenized, we won't achieve what we need to achieve. So what I hope for is that people lose the nostalgia for the past and have an eye towards the future.
Thanks, Peter. On that note, and with this call to action, I want to thank our panel. So please, a hand of applause for our panelists. Tommy, over to you.
Thank you, great. Great, thanks everyone. Thank you so much for the very interesting conversation to get us started. And now just a reminder that we will have a coffee break right after the next panel. So don't despair, we will let you all go and grab your coffees. Before introducing the panelists for the next, and thank you, by the way, a big round of applause for the QED team that is making this event happen. You're gonna see them around in the next couple of days. They're an amazing team, so whenever you see or you have any questions, you can always ask them, of course. They're super helpful. We go on with our program, but before that, I also wanted to mention a couple of other things that I keep forgetting. First of all, we also have a lot of people following us online. So a good morning, buongiorno to all, to everyone following us online. For those that were not able to participate in person, we had to, of course, unfortunately close the registrations because this year there was a lot of interest, a lot of registration. So we're very, very thankful, of course, for everyone that is here today and that is following online. So, but for those that are here in the room, I also wanted to mention a couple of last things and good news probably. There will be, as we did 2 years ago, not last year, but 2 years ago, and we're doing it again this year, we're going to have a couple of interactive moments. So a quiz offered by our sponsors at Ava Labs Outlets Plains. So the team will be here soon. There is a very, very cool prize actually. I'm not gonna spoiler that, but during the lunch break, so at the end of the lunch break today, and during the coffee break this afternoon, and as well tomorrow in the morning during the coffee break and the lunch break, we will call you all back here. There will be an interactive quiz moment, and the winner of the quiz is also gonna get home with a lovely and very, very cool prize. So I will be playing myself because I wanna win the prize, and I do not know the questions in advance. Don't worry, I'm not cheating. But without further ado, let's move on. We keep talking about tokenization, one of the main topics of this morning program, but also one of the main topics that is being discussed these days in Brussels. As we heard from the commissioner, we heard from the previous panel on the way, especially the way that the industry is moving and is looking at the DLT pilot regime and everything that is going to be reviewed now in the upcoming package. But we also want to hear what are the views of Europe's regulators. And so I'm very, very happy to welcome on stage Karsten Ostermann, Head of Markets and Digital Innovation Development at ESMA. Welcome, Karsten. Thank you for being with us. Alessandro Darold, EU Government Relations and Policy at EMEA for Kraken Digital Asset Exchange, and Coco Chen, Associate Director for Technology and Operation at AFME. Thanks so much all for being with us. Big round of applause as our panelists come on stage. Welcome, welcome. Thank you, Coco. You have your microphones? Yes, great. Thank you so much. All right, let's have a great debate.
Great. Good morning, everyone. Tokenization part 2 here. I think we're misselling the panel a little bit. We only have one regulator on the panel, but Alessandro and I can cosplay a little bit and provide some regulatory and policy views. So very delighted to be here. We only have a short 25 minutes, but we are, I think, quite happy to take a few questions at the end. So if you're in the room, you can raise your hand when we get to that section. If you're online, I believe you can send in your questions through the website, or even if you're in the room through Slido as well. So just wanted to kind of give you advance notice. So super delighted to be here. I think we've the last panel has already set the scene very well for us to take that discussion forward. I think just in terms of the kind of types of volumes and transactions that we're seeing in tokenized markets in Europe, my organization AFME is now putting out a biannual report on DLT markets. And I think last year we observed a lot of momentum across fixed income funds, repos, as well as increasing stablecoin volumes. A lot of that was actually driven by the ECB trials and experiments and the Swiss National Bank's trials as well, and issued outside the pilot regime. So we'll be really interested to get your views on that, Carsten and Alessandro. So maybe just to start, Carsten, wanted to ask you a little bit about what has been observed in Europe in terms of tokenization. How would you characterize the markets, the volumes, the types of use cases you're seeing, and what is needed for further scaling?
All right, thank you, and thanks for inviting ESMA to this one. I see as the regulator I'm being squeezed in then apparently. There you go. I was going to say overall on the environment that we're in now, what we're seeing certainly is it's still relatively small scale overall. I think the areas are indeed then fixed income that you referred to already, tokenized funds, and then also tokenized wrappers for equity and other things. On the fixed income side, I think the Europe seems to be in a pretty good position. There is certainly something happening there. It is true, it is driven then by central bank experiments, but we see, supranational issuance, certain sovereign issuance, so there is something happening there. And probably, recently, year on year, what we're seeing, the biggest growth is indeed in tokenized funds, predominantly in money market funds. And then there are indeed these, wrappers for equity-like products where, we're probably going to hear from Alessandro later on because Kraken is running one of those. And then on the DLT pilot, of course, we heard quite a bit already in the previous panels. So 6 entities authorized. I think I can also reveal that there are quite a number still in the pipeline, also exceeding this number of 6. But it's still probably fair to say that the DLT pilot regime, for the many reasons that were already mentioned earlier on, had a pretty slow start. It's coming up for 3 years now. I think it applies since March 23, and yeah, it's only 6 authorized entities, and also the volumes happening there, taking place there, are relatively limited still. But, it's certainly not all bad. It is a pilot regime, and as we heard just then, it's going to be upgraded then, reasonably soon. Maybe if I can go off on one tangent, in the whole centralization of supervision discussion, you hear a lot of people who are opposed to the centralization of supervision to say, like, supervisory convergence is great. I can tell you supervisory convergence is a bloody difficult job. And, I've been doing it for a while at ESMA, particularly if you're dealing then with like Mika and hundreds of entities. However, shout out to Stefan then, certainly this DLT working group is working great. And there I see, an openness, transparency between supervisors and then information sharing that, we don't see an awful lot in ESMA. And therefore, granted, it's a small number of entities, but, that's a great example of indeed supervisory convergence working.
Absolutely. And why in ESMA's view is tokenization important for the broader economy?
Well, again, a lot has been said. I think from the ESMA position, from the ESMA view, it is, of course, the promise of efficiency through automation. We can certainly do with that in the EU. It is the promise of 24/7 trading, of fractionalization, of easier funding, particularly for SME issuers. So all that is promising. The other, what I would consider, then important, again, very much from the ESMA, from the European perspective, is that indeed here we would create an integrated framework where we're not going to sit here again in 20 years' time and then complain about, insert name of some law professor here, barriers that stand in the way of having a true EU market.
That's great to hear. And Alessandro, really interested in your views on the benefits of tokenization as well. Obviously, we've heard a lot about cheaper, faster transactions, risk reduction, greater accessibility to capital markets, more transparency. Why is it important to sort of bridge tokenization in capital markets with other initiatives beyond capital markets? And what is Kraken doing in this area?
Yeah, absolutely. So good morning, everyone, and thank you, Coco, for having me on the panel. So my name is Alessandro. I represent Kraken Digital Assets, which is originally a crypto exchange. We are now working on the mission of bridging that gap that exists between TradFi and the future of fintech. So it's actually great to be here today and talk about tokenization. I think it's interesting to see how tokenization and the term is changing very much. And it's moving from a niche perspective. 5 years ago, it was not even on the agenda. And today we're starting this international conference, thinking about it, commissioner is speaking about it, and we're here on a second panel about tokenization. So we see that there is a trend there that is coming, and this is going to be really disruptive. I want to, though, reframe tokenization a little bit, because I think it's important to think of it. It's not a new product. So tokenization is not a new thing itself. It's a new operating model, which is going to be adapted for markets that are traditional. So we're bringing offline assets to the online and the on-chain world. So we're bringing capital markets to go at the internet of speed. And I think that is the angle in which we should frame it. And also, it makes regulators look at it in a different way, I have the feeling. So I'm not a regulator. So this panel, I'm going to be the counterpart, let's say. I think the benefits of tokenization can fit into 3 buckets. The first one is access. It's the ability for people to invest as little as 10 euros and do it from everywhere, anywhere, as long as they have an internet connection. And this is, the power of tokenization. This is not something that people are able to do as of today in some parts of the world. The other part is what Karsten was mentioning earlier, is the fractionability, is the operationability of tokenization. So the idea that you are a young European citizen, you don't want to buy a full share of Microsoft or Tesla or whatever it is, and you can buy a fraction of it, and that it gives the ability for people to enter that theme, which is one of the objectives of the SIU, the ability for the younger generation to enter one of those aspects of investing, which is going to be beneficial for your life. And then the last part, which again I think is very relevant for those regulators that are in the room, is how programmable tokens are. So sometimes we think about living assets that, however, are working in silos. So there is a lot of work that has to be done afterwards in terms of, settlements or in terms of reporting. Well, in the token economy, all those parts are within the token itself, and this is a huge, important, aspect of it. I think the last point that I would make in this consideration is the fact that this new system, which is tokenization, is something that is maybe new to some of the traditional financial, actors in this space, but it's not something new for the crypto industry and the players like Kraken. We've been doing this for over a decade, if you think about it. And at the end of the day, we use the technologies that is behind the digital asset world, and we're bringing it to the traditional markets. I think this is going to be the real disruption.
And we know that Kraken is very innovative in terms of product offerings. I think it was alluded to tokenized equities already, but also a plethora of other on-chain products. How would you sort of characterize the benefits of these products, and in terms of what they're bringing to investors, especially retail investors?
Yeah, absolutely. I mean, I think as we said. Those assets that we're bringing on-chain and in tokenized world are assets that would normally be static, so we're now transforming them. And I think there are 2 kind of buckets within the tokenization part that are very relevant. So tokenization can do 2 things. It can upgrade products that are already there, so innovate products that are already there, and this is what we've been doing. For example, at Kraken, we've launched a version of tokenized equities, We call it Xstocks. It's new. It's live in Europe as well. So we are an entity that is registered with a MiFID license in one of the EU member states. Xstocks is, at the end of the day, the ability of buying a token version of an actual equity, but with the benefits that we have just discussed. So 24/7 kind of ability to purchase it, the ability of self-custody, the token itself, the fractionability of it, so the ability of buying it with 10, 15 euros, and you can already access that market that before was hard to reach. So that is one angle, and that I think is one of the things that excites us a lot. But then there is another angle to tokenization and innovation in products, and it's the ability of thinking of new products that do not exist as of today. Mm-hmm. And I'm thinking, for example, about micro-investing. That is something that some neobanks are trying to do. So the idea that, for example, you can have spare change and you invest it. That normally happens either weekly or monthly, at least in Europe as of today. Imagine in the token economy, we are going to be able, to pay a coffee €1.20 and immediately invest the 80 cents into a tokenized, atomic instant investment. And that is going to be disruptive. I think that is something that we don't see out there yet, but it's going to be cool.
Yeah, there's definitely a lot of potential when it comes to mobilizing funds. Carlston, how would you sort of react from a regulatory perspective to those two, broadly speaking, categories of new products that Alessandro just talked about, tokenized equities and micro-investing? What are your thoughts?
Yeah, on the tokenized instruments themselves, it goes kind of back to the regulatory framework, right? Like intuitively, I think what we would like to see is, and I think that's where the US headed is, equity is equity, regardless whether it's in tokenized form or in securitized form, whatever it may be, or in paper form. And then the regulatory treatment should be the same. There are obstacles to that right now in the system. I understand then the package may address some of them, but not to a full extent as I understand it. So there we probably still have some work to do. On the atomic kind of investing then immediately whatever is left of the euro to the coffee you buy. I mean, that personally sounds great to me. But probably, for retail investors to really get into it, you probably need more than that as well, right? Because I think what you're offering at the moment is, okay, fair enough, there may be some American instruments which otherwise are difficult to get hold of directly, so there is the benefit of doing that in the tokenized version, but for then the European market to move to a complete version of a tokenized economy, I don't quite see that we're there yet to have the narrative to really, promote that kind of transition.
I mean, perhaps the benefits will increase and become more transparent as more investors, more real economy actors, more companies, more financial institutions go on chain. Right.
Yeah, absolutely. I mean, I take the point, and I think you're right to some extent. And there is a distinction, an international component to it that maybe we can touch upon later. But one of the angles that I would say is that we are a little bit on uncharted territories, right? And when you talk about innovation, we really need to think about it as an instrument for development of those markets that we are talking about. So when we launched this Xstocks, for example, we didn't really know how much was the appetite out there. And it's a bit what innovators do and what companies like Kraken do, right? So you try to see whether it is a product that sticks and it is of the interest of the consumers and the citizens of a certain jurisdiction. So far, we have been seeing a considerable uptake, and I think that is promising. And this is true not only for tokenized equities, but it's true for tokenizing other real-world assets that are out there. And we've seen it, for example, with in the United States with treasuries and the BlackRock kind of activities, which have reached $1 billion in a short period of time. I think that is up to the consumer at some point to decide whether a product works, as long as it fits the rails of regulation and it's something that is very well explained and the risks are understood.
Yeah. And if I can chime in, I was going to say, of course, in traditional markets, as a retail investor these days, you can also get a pretty good deal when it comes to fees and indeed in the weekly or monthly executions and what have you. In this space, then it is true though as well that if you ask the ordinary retail investor in terms of what do they know about tokenized stocks, then there's probably a lot more uptake on what you're doing, what Robinhood is doing compared to the entities that you have under the DLT pilot regime, which probably then also tells you a story.
Yeah, and I think if I can, just comment on this very quickly, I think it is also a question of how much we're going to be able to explain it to consumers and to citizens out there. So I don't think we are trying to replace anything. We're just adding options for people, and that's only positive to me.
And Alessandro, if you're able to comment on any outstanding regulatory barriers to these new products, are there any that you would want to direct to the audience's attention?
Look, I would take the question under a different angle, and I would look at what's happening around the world. I think that's interesting and speaks in itself about what regulation can do. So regulation can definitely foster credibility, also for companies like Kraken. I mean, we've been with Mika, we've been supporters since day one because it gives that clarity that is giving you space to operate, and then the ability for citizens to, be trusting in a product that is out there. So if we look at the world, when it comes to tokenization, we see the UK, for example, that is now working on a sandbox, and they really put together industry and regulators and at political level to try to understand what are the gaps and how to move forward. If we look at the United States, as we mentioned, where regulation is a little bit less complicated sometimes, let's put it this way, we see an uptake when it's the market that dictates the system and the products. I'm not saying that is necessarily the best of the words, but I think that is an angle of it. And then if you look around the world, even countries, I'm thinking about the GCC and the Middle East, for example, that are a little bit more skeptical about the crypto world and the crypto trading. They are, however, looking at tokenization. So, for example, Qatar has still cryptos being banned, but they have developed a tokenization framework because they think this is going to be the real, forward thinking. And like that, there are many other countries from Singapore to Hong Kong. So what regulations and what I think regulators should think about in Europe, and I have, I'm not here to teach or to preach, but I think the interesting bit in that is that we should think of innovation and regulation as a highway, and we should try to put products on that highway that respect the boundaries. But our German friends teach us that if the highway is straight, you don't need speed limits, and that's, I think, one of the angles that we should think about.
Yeah, I mean, Carsten, any thoughts on kind of improving pan-European highways? I mean, we do know that there, I think, are 16 entrants in the digital security sandbox in the UK, which is a pretty comparable regime to the DLT pilot regime, but maybe with a bit more flexibility. And the pilot regime currently has 6 entrants, which is, also very positive, but maybe the proposals tomorrow will unleash the floodgates even further. What can Europe do to be more ambitious, Carsten?
Yeah, I mean, first of all, as a German, I'm not sure I agree on the speed limit not necessary on the highway. Maybe in the minority on that. I decidedly I don't want to do the usual European thing of everything's terrible and everywhere else in the world everything is better, because it's clearly not. Yeah. We are, as ESMA, in support of the DLT pilot regime. No doubt it has its limitations that were, discussed among us and in the previous panel, but, some of those will be addressed then, I assume, once the proposal comes out tomorrow. So it should become more attractive, it should become more scalable. However, it is still a pilot regime, and, a pilot regime at level 1 in itself, is a difficult product, because whenever you want to change something, you run into a process which takes years. And I think in the leaked proposal that I'm sure we've all seen, I think the next review is then foreseen for 2031, if I remember correctly. And of course, 2031 is a long way out. So, I'm wondering then, in between, if there is something else that could be done to create these sort of integrated EU framework. I take the point of, yes, indeed, ideally, at national level, the e-securities laws, they are all aligned, but I am wondering, in the recommendation or communication from March from the Commission, there was a reference to the 28th regime, and then, can this not be a nice test case indeed for the 28th regime to, start on a European foot from the outset?
And do you have any ideas as to, obviously exploring this idea of a 28th regime, should it be confined to DLT securities only, or perhaps broader to also traditional securities? Is that something that should be tested within the pilot regime?
Yeah, that would be good, but I'm looking at some of my standard interlocutors from the traditional regime, and it's a tough one there to indeed engage into. Those are the barriers that we're dealing with for the last 20 years or something, and so far we haven't quite managed to break them down.
Yeah, I think when you kind of look across the regulation of DLT securities, a lot of the issues actually stem from the traditional regime, right, and are just kind of extensions of existing problems. So I think just kind of turning to the audience, happy to take any questions from the room or from online, if there are any. Very shy audience.
Thank you. My name is Mikolas. I work with Bybit, and I must say that we support the idea of the high regulatory standard and potentially essential supervision, if that is the decision of the national competent authorities and member states and the key institutions. However, the question lies in the implementation and whether the ESMA would be prepared to handle all the work that comes along. So my question would be, how do you envisage to see that implemented, and what would be the timeline to your liking?
Yeah, that's a tough one. It's clearly, we get to hear the argument a lot now these days where, the proposals have been leaked and it's becoming more concrete, yet, ESMA doesn't have the expertise and the manpower to do these various jobs foreseen. And that's true, of course not. We don't have 100 people locked away in the basement who we're letting out once the competence is there. So of course this needs to be built up over time. And then I think from what I remember from in the proposal, I think that is indeed foreseen to, gradually scale up then, so the central supervision would start, say, in 29, and then ESMA would gradually indeed also build up its people, its the number of people working there, which should still be, compared to what you have in 27 authorities, should be, there should be fewer staff, but clearly then, cooperation with the national supervisors will still be essential. Convergence will still be essential, because we're still going to live in any case in a fragmented environment, and therefore, I don't think it's the case that we then take over absolutely everything, but it will be very much the case for a cooperative endeavor there.
I think we forget that ESMA is only around 10 years old, right?
2011, 12.
11, 12. I don't know any other 11 or 12-year-olds who's doing as much, but certainly learning and growing. And
it started in 2011. That's right.
2011. Any other questions? There's one.
Is it on? Do you hear me? No.
This one. Number 6, I think.
6?
Yeah. Okay, hi again. I'm Melanie Moore from the Crypto Risk Metrics, and I'm having a question maybe a little bit off topic regarding your communication around white paper requirements and XBRL from last week. Do only white papers handed in after 25th of December this year need to adhere to the XBRL standards, or also the ones already handed in and notified before?
I think it's a question around grandfathering of white papers.
Yeah, I'm afraid that is one question that I would have to take away, and then, feel free to contact me bilaterally.
Okay, I definitely will, and thank you very much.
Great, thank you. Well, I think if you wanted to kind of take maybe 1 second to share a final view with the audience on what you think is needed to really kind of reach the tokenization end state, what would be your advice, Alessandro?
Yeah, thank you, Coco. I think I would take it from this perspective. Look, today the crypto market cap, I checked it this morning, is around 3 trillion, which is also something that the commissioner mentioned earlier. It's big. Bitcoin is in the top 10, assets for market cap today. But if you think about it, in the grand scheme of things, it's a drop in the ocean. If we look at tokenization, by 2030, I was reading a couple of articles. The most conservative, views are that the market is going to be around 3 trillion US dollar market cap. The most optimistic ones say it will go up to 16, 18 trillions by 2030. This is the real change, and this is going to be where it's going to be happening. So tokenization is not for the 3 trillion. It's for the 20 trillions. And if that's the overview that we have by 2030, I think we should all work together to build an ecosystem in Europe where, we keep innovation here, fairly and well regulated, but we keep it in here. That's my hope.
So huge opportunities for growth, but also for integration as well. And Carlston, any final words for the audience?
Yeah, very quickly, I guess, I can see the developments maybe then indeed in fixed income or also on the fund side, but then for the equity market, I still think there is work to be done to then develop a clear plan, a clear way forward. And on the regulatory side, I think I said before what I would see there as helpful, and then see what happens tomorrow then and beyond.
Excellent. Well, thank you very much for your insights. If you could join me in thanking the panelists for this very informative session.
Thank you. Yes, thank you, Coco. Thank you, Karsten. Thank you, Alessandro, so much for the great panel. And now we have our first coffee break. So please enjoy your networking, enjoy your coffee. This is a normal coffee break, no quizzes. But please be back in the stage, here in the stage in 10, maximum 15 minutes, as we are, of course, a bit delayed with our program. We have a lot of interesting panel debates today. And thanks again for being with us.